As part of knowledge series, today we are going to take forward the risk management introduction that we have given in the earlier and we are going to talk about credit risk management in this edition of knowledge series. Credit risk is a very important part of financial intermediation, management of credit risk. I think we have already seen how the NPAs in the banking system are becoming an inhibitor for the growth of the banking industry. Now, there are three aspects as far as the credit risk management in the banking system is concerned. First is the credit origination. Second is the way the credit is monitored by the banks. And the third, if there is a delinquency, that is, if an account becomes NPA, how to resolve the problem credit at a much faster pace. When we come to the credit risk management aspect, we can observe that in the recently in RBI in its report on trend and progress in banking 2019 and 20 edition has clearly laid down 4 reasons for the rise in NPAs in the banking system. The first one was the faster growth of credit between 2005 and 2012. That is the period where the credit growth has been very, very fast. The second is the willful defaulters. And the third one, which is very frightening for the financial sector, is the poor credit origination. And the final fourth point is slackness in monitoring credit. Now, when we look at these aspects, one thing very clearly comes out that credit risk management system has to be strengthened if we want to have a good credit culture and a good credit ecosystem in the country. If we want to do that, then the most important point that comes to mind is about the credit origination system. If we are in a position to improve the quality of credit origination, I think the rest of the processes that follows the credit origination can be better taken care. Now, as far as credit origination is concerned, it remains on 5 pillars as far as the banks are concerned. The first is the information submitted by the borrower to seek a loan. Second, the due diligence that is done about the capability of the borrower to borrow the loan. That is the track record of his repayments, his credit history and his credit rating. All these things are taken into account for the purpose of satisfying that he is a worthy borrower. The third aspect is what is the kind of business or the project to which the money is going. Is it viable? That is the technical viability of the project per se. That is the third one. Fourth one is the entrepreneur capable technically to carry on the business and get the generation of revenues in line with the growth aspirations of the unit. And fifth and the final point, which is very, very important, is what are the prospects of the line of business to which the bank is going to lend money. Because this money belongs to the depositors and bank is consciously taking a credit risk to ensure the money has to come back to the bank so that the deposits can be serviced. So these 5 aspects are very, very important, and banks do take care of these 5 points. Now, one thing I would like to add here, the recent changes that have happened. Based on that, the quality of credit can increase. that is the market intelligence system that is available now. Credit history, that is the capturing process, has improved. RBI has a huge database with it, that is, which is known as CRILC, 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 that is the database on borrowers of 5 crores and above. This is a very important information with reference to which the banks can check whether the borrower has already availed the loan from some other place or how it is going, one can access. The second thing is CERSAI, that is the registration of charge on the assets of the borrower. That has also been started. And the third most important thing that has happened is special mention accounts, that is the stress accounts, that is where the incipient stress, the stress has not yet manifested, but it has just started manifesting, because the special mention accounts are having database in 3 groups. That is the default or delay in the repayment of loan up to 30 days, that is SMA 0, 31 days to 60 days, that is SMA 1, and 60 days to 90 days, SMA 2. So this database is available with the banks. So that is a great relief as far as the banks are concerned. And the credit rating system has improved, and banks also have their own internal credit rating system. Now, with the help of the mass of data that the banks are right now having, which is better qualitatively when compared to some years ago. So on the basis of this, the banks can improve the quality of credit origination. Now the point here, what happens is the autonomy in credit decisions. Autonomy in credit decision is related to the corporate governance standards of the organization, which needs to be strengthened, no doubt, and there should be no interference as far as the credit administration is concerned, and the decisions which are taken must be independent, viable and sustainable from the point of banks' lending policies. At the same time, the banks have their own internal processes and procedures which are well tested and which can help the bank to appraise the credit properly in an improved format. Now, when the credit origination quality improves, then the entry of credit, that is the assets which enter into the banking system, loan assets, will significantly increase, provided the banks do the what you call due diligence at the correct time with correct information, cross-checked information and verified information, so that the quality of credit origination, that is the evaluation of the project, that is what we call the credit appraisal system, improves. Now comes the next part, that is sanctioning the loan, disbursement of loan and end use of loan. These are the 3 composite factors which are post sanction of loans, which are very important stages as far as accomplishing the end use verification of the funds are concerned, so that there is no diversification, there is no use of money for a purpose other than for which it is granted. See, if you can ensure that, then there is a very rare chance that the loan doesn't come back to the bank. The chances are the loan will be serviced properly in time, because the funds have been applied for the right cause. The next stage is how to monitor a loan which is in the books of the branches, books of the bank. As far as the operations in the account are concerned, loan operations, it is the mirror image of what happens in the unit. How much of transactions are taking place, how operations are taking place, how the suppliers are paid, how the receivables are received, and these aspects will be reflected in the operations of the branch. If that is taken care and a right alert is raised about any deviations in the conduct of the account, I think we can prevent accounts from slipping, that is, the accounts turning into a delinquent asset. That we can give the correct information to the borrower, alert him, see that he improves his credit rating, see that he operates within the parameters which have been assigned to him, and ensure that he honors the terms of credit so that the credit remains active and productive. So if that particular part is counseling of the borrower or pursuing with the borrowers, advising the borrowers and taking information from him from time to time and alerting him about the conduct of the account, I think this follow-up has to be very, very intense. Now, it is not easy for the banks to follow up each and every account, because if you see the size distribution of credit in India, there are about 27 crore loans in India, that is 27 crore borrowers. Out of 27 crores, it will be very surprising that only few thousand crores, I think about 70 to 75,000 accounts are having loans above 1 crore. The rest of the loans are all small loans. But as far as the amount is concerned, 1 crore and above amount is a very huge amount, is around 70% of the loan that is under 1 crore and above. But as far as the number of accounts are concerned, they are very few when compared to the total. Out of the 27 crores of borrower base that a banking system is having, many of them, 99% of them are falling within 1 crore and below. That means if the banks are in a position to segregate and have different standards of follow-up of loans, 5 crores and above, that is why Reserve Bank of India has started monitoring 5 crores and above, because these numbers are manageable numbers. But below accounts can be grouped together to follow up functioning of the credit risk management system. So if we are in a position to have in our surveillance those accounts which are of higher value, of course it depends upon the size of the branch as to what is the cutoff that a bank is considering as far as monitoring is concerned. Of course all accounts have to be monitored, but more important, those accounts which are of higher value, that is 1 crore and above. 1 crore and above needs to be scanned, needs to be scrutinized, needs to be followed up, and needs to be kept under a special scanner of the branch people so that they don't slip out. Why this is very important, credit risk management? We may have asset reconstruction companies, we may have, even nowadays we are talking about a bad bank, we may have IBC, Insolvency and Bankruptcy Board, which monitors the functioning of the NCLTs, that is National Company Law Tribunals. Seeking the help of IBC, invoking IBC may speed up the loan recovery. We may take any external help. There are DRTs, Debt Recovery Tribunals, NCLTs, Lok Adalats, and other measures to enforce recovery. That is fine, but unless our credit administration is foolproof, it becomes very difficult to control the credit quality. So what I would suggest, let us put our systems very rigidly in place so that credit origination is strengthened, quality of credit improves, all other tools of recovery we can use if there is a need. But that is always an external help that comes only at times, but it should not be on regular basis. So credit risk management is a very comprehensive task that need to be done with a lot of coordination, with a lot of efforts at various levels, and maybe that technology can be used better to keep a control on the quality of credit. Thank you very much.